Good afternoon, everyone, and welcome. I'm Kristina Dayback, the Chief Operating Officer here at Vector. We're delighted you could join us for this Ask Me Anything session. Today, we have the privilege of hosting Vince Timoney, the Senior Managing Director at Citizens Bank. During our time together, we wanted to give you in the audience the opportunity to ask questions about the new VC Emerging Manager focus of Citizens, the transition from First Republic Bank, and how they position themselves in the industry through all of the banking shakeup that happened earlier this year that we're all well aware of. We wanted to take this opportunity to understand Vince's perspective on the changes in the banking industry, as well as Citizens Bank's unique approach and plans for their new team. This is designed to be interactive, an interactive Ask Me Anything session, and you'll find the questions box in the bottom right-hand side of the screen. You can go ahead and submit questions at any time, and we'll address them as they come up. We will anonymize any questions you submit, so they will be private from the rest of the audience. We have some questions lined up to get us started, but feel free to submit your questions as we go along. This webinar is being recorded, and we'll be sending out a follow-up after the session with the recording and a way to contact Vince or myself in case you have any further questions or would like to chat at all. With that being said, it's time to finally kick things off. Welcome, Vince. How are you
thank
today?
You for having me. Great to see you again, as always. For those that don't know, Kristina and I had the privilege of working together for a few years at Carta back in the day. So it's always great to be amongst friends. So thank you so much for having me.
Definitely a longtime friend and former colleague. Definitely looking forward to this one. With that being said, I'll ask the first question, and hopefully you don't mind that I just pepper you with questions.
Jump on in. Do it.
All right. Can you share the vision behind launching this new VC manager division at Citizens Bank and how it compares to FRB?
Yeah, no, happy to jump in there. Yeah, I think, through all the turmoil of March and the preceding months or the following months after that, one thing that was important to us at First Republic was the ability to continue to serve the entire venture ecosystem. I think through the fallout of SCV, First Republic, and Signature, one of the important aspects for us was being able to serve kind of all of our former clients that we had at First Republic, and it became clear to us that the ability to do so at a large money center bank was really not going to be possible. So once we realized that, we wanted to look for a bank that had a large enough balance sheet to allow us to continue all the products and services that we had offered at First Republic previously, as well as a bank that was small enough to really allow the same service model that everyone had come to know us for at First Republic in terms of one point of contact, making sure that you knew everybody that you call. There's no 1-800 numbers or group inboxes, things like that. Relationship has always been the most important thing to us from our business model, and we wanted to continue that here, and really that's what we have now at Citizens Private Bank. They've been super supportive in terms of moving us over here. There's over 150 folks that have moved over from First Republic, so it's truly building that same service model where you have, again, one point of contact for all of your needs, from an emerging manager through multi-billion-dollar asset manager, for your firm needs, for your underlying portfolio company needs, and it's for your personal needs as well. So we're really excited to bring that service model and business model back to the market to ensure that again, every firm within the venture ecosystem continue to have that white glove service that we were so known for at First Republic.
Yeah. So what do you think sets your current division apart from other banking services, specifically those aimed at the VC and PE market?
Yeah, I think first and foremost, it's really about the people. And one of the exciting things about us being able to move over here was being able to take our entire team. So, I think as the fall has occurred, there's a lot of groups that have taken, a handful of folks and gone to another bank to start something. But what's unique about this situation is that it's not only the senior bankers like myself that have been able to move over, but also our credit underwriting team, also our day-to-day account managers in terms of getting an SPV opened up very quickly and understanding both what that entity is, why there's a rush around that, and how to make it happen very quickly. So it's it's really that full spectrum of service that's been able to pick up and move over here to maintain that same quality of experience that's over here at Citizens Private. And I think those that have started to move over have seen that very quickly of, okay, who did I work with before? It was an Elvina, it was a Roberto, and being able to loop that same kind of day-to-day contact back into the conversation, in addition to myself and the underwriting team, has been what's made this a truly unique experience.
Yeah, you mentioned the transition. How do you think the transition from FRB to Citizens Bank shaped your approach to client services with this new bank? And then right after that, I have a question from the crowd.
Sure. Yeah, something that was always unique about First Republic was the culture that we had there, both with our colleagues, but also with our clients. And, as we kind of transitioned away from First Republic and we're looking for a new home, culture was a huge part of that decision-making process. I think we were very lucky in some respects that we had the opportunity to go out and look for a new banking home to start this practice. It allowed us to see different banks and how they approach the market. I think for some it was, hey, here's our existing model, and we'll try to slot you in and try to cram your business model into what we already do today. And as we explored those conversations and certainly had those conversations at JP Morgan, we realized that really wasn't going to work for this venture ecosystem and how we like to work with clients, but not only that, how they expect to be served. And again, having that white glove service being part of that. So, what's been unique about the experience in terms of transitioning over here is the culture of Citizens has been phenomenal. Just from a support perspective, obviously, that was a really emotional, kind of few months for those of us that went through this crisis, again, both on the client side, but certainly for those of us actually at the bank. So to see the support from Citizens as we transitioned over, to make sure that we have everything that we need to succeed. And that certainly includes, the resources for the private bank in terms of standing up this business. They've been phenomenal in their support for us. It's not, hey, here's how we do things and just kind of adapt to the Citizens way. It's how do you need us to do things for you and your clients to be successful? Let's learn from you guys and build this together. And so that collaboration and culture has been fantastic since moving over.
Yeah, that's awesome. You don't usually hear that banks are malleable to changing processes. It's usually
not common.
You mentioned the credit underwriting team a couple of times before. A question from the audience mentions, fund underwriting. What changes to fund finance underwriting do you see as acute versus permanent?
Yeah, I think just in general overall, and this isn't unique to fund finance, but certainly the credit market in general is tighter. The cost of capital is obviously more expensive. That was a product certainly of the Fed raising rates, but the banking crisis, certainly exacerbated that. And so we do see that. So it's a case of where I think banks are overall being a little bit more selectful in terms of who they work with. From a credit standpoint, and for those that they do decide to work with, obviously, again, the cost of capital is going to go up. I think from our perspective, and I mentioned this earlier in the call, it was really important to be able to serve the full spectrum of clients, and that includes lending as well. We wanted to make sure that, if we had a client that, had raised a $10 million fund one and was largely backed by high net worth individuals and family offices, that we'd be able to put a term sheet in front of them in the same way that we'd be able to do so for a multi-billion-dollar asset manager that's on a fund 10. And so that was one of the key components into our decision-making process in terms of where we established our practice. And again, thankfully, that's something that Citizens has been super supportive of. And so we've already been, talking to some of those smaller managers and putting term sheets in front of them.
Yeah, something that you'll hear a lot, I know you know this, in the venture ecosystem is a lot of the service providers are very relationship driven. How do you see your relationship driven engagements adding value to the ecosystem?
Yeah, I think a lot of times, and again, particularly with emerging managers that I know, Vector works with quite a bit, one of the things that we're doing is not really just banking services. A lot of it is a conversation around best practices and understanding the industry. That includes, funds asking us, hey, who are the best fund administrators that we should be talking to? Who are the best lawyers that we should be talking to? How should we structure our data room? Are there different LPGP connection events that, you can integrate us into? Is there thought leadership that you can provide to us and to our portfolio companies? And those are all things that, we've certainly done throughout our career, both at First Republic and are now continuing here at Citizens, because we understand that, yes, of course, you can get a cash management and a sweep account at any bank, right? For the most part, some of the big ones, of course, are a little more selective, even on the treasury management side, as we unfortunately learned. But in addition to those day-to-day banking products, whether they be treasury management and certainly the debt as well, it's really those relationship aspects that you mentioned, Kristina, in terms of being able to have a conversation, talk them through, what a job description looks like, as they're hiring, perhaps an in-house operations person, and all the different responsibilities that person has, as they're looking for, consulting CFO, a full-time VP of finance, being able to tap into our network, see what makes sense, help them with that job description, and make sure that they can bring on the right person for their firm based on, what they're trying to do over the next 5 to 10 years. Those are all things that have been a part of our practice, both at First Republic, and we certainly want to make sure that we're able to do that here because, as I've learned throughout my career, relationships tend to last far longer than the name of the bank or the company that you work at.
Totally agree. And hopefully when people are asking about best fund admins, you mentioned Vector quite a bit. I will make sure to hold you to that one, Vince. Yeah. So there's going to be a double-sided question here, one that I was going to ask you, and then another one from the audience that's kind of tailored to it.
Sure.
So will there be any specialized products designed to meet the unique needs of fund managers? And then on top of that, what emerging manager resources are available or are in the pipeline at Citizens?
Yeah, so I'll answer that in a couple of ways. I think that the products that we offer in terms of cap call lending, management company lending, whether that's a revolver or a term loan facility, and then certainly in GP finance, are unique to the fund finance sector in general. And there's not a lot of banks that offer those products off the shelf to emerging managers. And again, as we made a decision about where we wanted to bring our practice long term, it was important that we could offer those fund finance products to all managers of all sizes, not just the large established managers. So certainly we're able to do that here at Citizens, which we're really excited about. And then in terms of, kind of, are there unique resources or products that we have available here at Citizens Private Bank for the emerging manager sector? I would say the answer there is yes, although they're not necessarily specifically banking products. I kind of referenced it a little bit earlier in the call, but something that's unique to our team and the Citizens Bank platform is what we kind of call a value add. So as folks that worked with us previously would remember, we've often done different networking events to bring together our limited partner community and our GP community, and there's larger organizations that we partner with that on as well, things like the Raise Conference or Revere or Friends at Allocate. And so we'll continue those partnerships and also do our own events programming around that. So that's certainly something that will continue, as fundraising is always front of mind for any manager of any size, but certainly emerging managers. Getting that network of LPs together is always important. And then additionally, again, we do have some resources on staff. My colleague Sean Park is a really experienced CFO in his own right, and ran a great consulting practice. And the best way to think about what we offer with Sean at Citizens is basically think of it as CFO office hours. Oftentimes, as an emerging manager, there's things even your fund administrator is not necessarily going to do for you from a CFO capacity, and so there's going to be questions that you have about moving forward with things like creating that due diligence package and how to answer ODB questions. And Sean's available as a resource for our clients that don't necessarily have those resources on staff yet. They can talk to Sean about those best practices as they move forward.
Totally. Yeah. And I think you hit on this one a couple of times, but there's anything else you wanted to add to, but can you speak to exactly how you would support an emerging manager outside of everything you've already mentioned, or is that pretty much it?
Yeah, I think those are certainly the main ones. I think, again, we often get a lot of questions around just generally best practices, or for example, I remember last year helping an emerging manager with creating a reserve model, something that they hadn't really thought through, and making sure they understood, look, you need to invest every LP dollar, not just the ones minus management fees. So there's a little of it that's just things that you haven't necessarily thought of before, because you haven't really been in that chair to run that, and you haven't thought through the finance piece because you're typically not a finance person. You're an investor, and that's your priority. And so we're here to try to make sure that you do the best that you can and succeed. I think of it as how can we both help your finance team look good, but also how can we try to increase your probability of success in terms of getting to a fund 2 and getting to a fund 3, increasing that LP base from largely high net worth individuals to family offices to more institutional. If we can be helpful and incrementally improve that opportunity for success, then we're doing our job and maintaining a relationship client for a long time.
Totally. And then as those funds become fund 1s, fund 2s, fund 3s, and they become more complex, how does your service model adapt to meet that increasing complexity within the funds or the firms as they scale?
Yeah, I think primarily, that often involves, again, just the different products that we've talked about before. They are very basic and straightforward, even though they're the same products for a smaller manager, and they become increasingly more complex as the debt need of that firm increase, as the size of the firm increases. So, one example of that would be on a GP financing, product, for example. Oftentimes for the solo GP or just one or two, that's a very straightforward process, perhaps just a loan to the management company to help facilitate that. Whereas if you scale up and now you're a firm that has 10 plus people that are part of that GP, well, now it's a more programmatic approach that takes a while to build that model together and make sure that we've got a product that's tailored to the different varying degrees of need within the GP. That can be both a loan size amount, that could be what the personal balance sheet and wealth needs are of those individuals. So it does evolve and change as the needs of the client change throughout their life cycle.
Yeah, sounds like you guys have the ability to grow with the firms as they grow as well, and that's super exciting. Always the goal, right? Both from a fund admin, a banking, any kind of relationship perspective, that's always the goal.
Yes, definitely.
Completely separate topic. Given the sensitive nature of the industry, what measures do you guys have in place to ensure financial and data security?
Yeah, I mean, first of all, I think it goes without saying banks are heavily regulated. We've all probably seen that quite a bit over the past few months, and I think oftentimes that's something that folks don't necessarily have a real insight into. So for example, trying to log onto this new app to join the webinar today, that's something that is very highly blocked. So making sure I could find my iPad and be able to get into it because it's not going to be accessible on the bank's network. Being able to send email and share data securely. Obviously, there's not an ability to just kind of send that data typically through an attachment. There's oftentimes a site or a secure email that is necessary to facilitate that. So there's both rules and regulations around that are set by our regulators, but also internally, we understand the sensitive nature of the data that we're dealing with. You mentioned several times during the call this being a relationship business. We understand if we screw up with a client's data and expose, for example, their LP roster, that's something that's going to damage our reputation, not just in the immediate term with that one client, but this is a very small network in the venture ecosystem. That's going to spread very quickly and damage our business relationships far and wide. So it's imperative for us to always make sure that we have our clients' best interests as our own best interests.
Totally, yeah, and I never thought that technical difficulties would be a good thing, but it sounds like it's a good thing for citizens that you had a hard time joining.
Yeah, we don't want to let any random new apps.
Did you hear that, everyone? It's a good thing that he couldn't join before. All right. Are there any key learnings from your time at First Republic that you're applying to this new venture at Citizens?
Yeah, I think over the course of my career, I've been lucky to work at multiple really successful models that have approached the venture ecosystem. And as I've navigated throughout my career, I've tried to take the best of those different experiences and take them with me as I start a new journey. And the Citizens Private Bank is certainly a new journey. I never thought I would live through a banking crisis like the one we had in March, particularly after living through the 2008 crisis. I thought that was probably the worst it would get. But that said, I think one of the things that First Republic really hit out of the park and that they certainly talked about and were known for in the industry, is that relationship and that focus on relationship and having that at the center of everything that you do. I think oftentimes, banks do productize a lot of the things that they offer to clients, and based on, size, geography, what they can see as a potential earning opportunity off of the relationship, they slot you into that part of the bank, and you might not get the best service or the best relationship experience because of what their analytics is telling them to treat that client like. And I think the bet that we made at First Republic, and certainly are doing here at Citizens Private, is that this is a relationship business, and is every relationship going to hit it out of the park right off the start? No, but that's part of the venture as well, right? A founder might, start their first company, not do well, have that company be shut down, but they have a great experience working with us during that first opportunity. And so when it comes time to pick a bank for their second company, they go with us, and that turns out to be, a unicorn and a multi-billion-dollar company. And so whether that founder or that emerging GP is, somebody that has, a wealth of experience behind them and a proven track record, or is doing it for the very first time, we want to make sure that no matter what, they have an incredible experience working with us, so that whether it's now or it's their best friend or it's a family member that has a banking need in the ecosystem, they're going to, no matter what, say, I've had a really great experience working with the Citizens Private Bank team. You guys should go open your accounts there. They're going to take great care of you no matter what. That's the reputation that we want to have.
Yeah, that's awesome. And the key learnings from First Republic kind of caters into a question from the audience. Is there anything that you're going to do or be doing differently than what you were doing at First Republic?
Yeah, I would say one of the things that I personally struggled with, not only at First Republic, but I should say, every bank that I've been at is tech integration, and so certainly that's something that has been a priority for me in the early days here at Citizens, is making sure that we can accelerate and improve upon the tech integration capabilities that we had at First Republic. So it's something that does take time. It doesn't happen overnight. Like we talked about, banks are heavily regulated, so we can't just, turn on a key tomorrow to something new. But that said, we're making it a priority to ensure that there's a great digital experience, and that we'll continue to build out those digital capabilities as we move forward to really improve both, the relationship experience, but also make sure that, somebody on the phone or somebody traveling, has an excellent experience working with Citizens as well.
Or even a live stream webinar.
A live stream webinar would be great.
How is your division positioned to adapt to future market trends in VC and the PE space?
Yeah, I think one adaptation that everyone's going through right now is obviously the tightening of availability of funds. Everyone who's been out fundraising certainly knows that. Everyone who is at an operating company and dealing with valuation changes knows that. And so that's something that I think we're grappling with as an ecosystem. My personal view is we haven't really hit bottom in terms of valuation yet. I expect that to hopefully happen within the next 6 to 12 months. So there's still a ways to go on that. But I think because of that, there is going to be a tightening around liquidity, as we've seen. Obviously, there are a few IPOs that have been filed, which is great news for the industry overall. But until we really see, returns start to flow back to LPs in a meaningful way, we're not going to get back, to the fundraising levels that we saw, 19, 20, 21, which I think, particularly as emerging managers, would be great for everybody. So it's really okay. We're seeing, family offices and folks kind of back away from the venture ecosystem as they're not flush with extra cash. So how do we, go to that market and explain what a great investment opportunity this portion of the economy is? And that's a challenge that I think we have as an industry, but certainly, we want to do our part in explaining that. It's why we do have a lot of those GP LP events. It's why we want to do some thought leadership in that space to really educate folks on why this is an important industry and how it's a great long-term bet for folks to place their dollars.
Totally. Yeah. So we're running on a couple more questions. Wanted to just throw a little ask to the audience to throw whatever questions you have in that question section at the bottom right. But while we're waiting for hopefully more questions from the crowd, I know you hit on it a little bit with the roadmap with the emerging managers, but I don't know if you want to speak to it specifically. Yeah. What's the roadmap for this new division within Citizens?
Yeah, so it is an entirely new division. So in addition to, the teams from First Republic that focused on, fund banking and technology startup banking, we do have our traditional, First Republic teams that focus just on, again, high level private banking, commercial real estate, kind of everything that you knew from us at First Republic. There is a little bit of work to be done on certain product areas. So things like, nonprofit banking and being able to work with some of the family office LPs that we worked with in the past. There's a little work to do, again, both from a regulatory perspective as well as a product perspective to make sure that we have that ready to go. We talked a little bit about, GP finance, and there's a couple different flavors to that. but we're still making progress on that. A lot of both founders and GPs also have very interesting balance sheets from a personal perspective. And so it's education around how we did certain things in terms of underwriting to their non-liquid securities at First Republic. So again, a little bit of work to do there to make sure that our credit partners here have full confidence in what we're doing and how we're looking at things like evaluating GP carry and how we can give credit to that and lend against that for founders that have a lot of their wealth tied up into the startup. How are we able to evaluate that and make sure we've got a proper underwriting system that takes that into account when they're looking at a mortgage. So there's those pieces that are not necessarily ready off the shelf today in terms of being able to incorporate them into our underwriting practice. Things like, how do we finance a line just against GP carry long term? Those are requests we've gotten over the years. NAV lending in general, both for companies as well as funds. Those are things that we'll probably start tackling next year, but obviously things that we know the industry has long wanted, and we certainly want to make sure we can provide a wealth of products for our clients' liquidity needs as we move forward.
Totally. And as we wait for more questions to come in, I'll give you a little selfish plug as the last question. What's the process for VC or PE fund managers who are interested in becoming a customer or a client of this new Citizens division? What does that look like?
Yeah, I mean, it's a very straightforward process. Certainly feel free to reach out to me or any of my colleagues here at Citizens Private Bank. We can set up a call to walk through any questions that you have. We do offer, 1 year of no fee banking. And then after that, there's an earnings credit to offset any potential costs. So you won't have to worry about things like wire charges, things like that. But once you get that conversation going, there'll be a day-to-day banker that we pull in, a preferred banker to help you get set up. We'll send you with a needs list of things like your Delaware filing and a copy of your LPA to go ahead and get that account set up. We can typically get you wire instructions within 1 to 2 business days, and then online access shortly thereafter. So it's a pretty easy process for a debt product. Yeah, that's going to take a little bit longer. But once we've come to a term sheet and get that signed, we can typically get you the loan agreement to take a look at within 3 to 4 weeks after that signed term sheet.
And then what does the KYC AML rules for opening a bank within Citizens look like?
Yeah, I think overall, think of them as very similar to what we had at First Republic. I would say that it's right now been a little bit more streamlined, and that's certainly just because they haven't worked with as many funds in the past, and also because of the resources they have available to look at the private bank as we're onboarding new clients. But certainly we would love to have that conversation in more detail if anyone does have concerns, whether it's around crypto, whether it's around psychedelics or investing in foreign jurisdictions. Those tend to be the hot button items when it comes to KYC. So certainly welcome those. But I think from a best practice perspective, making sure you have an OFAC program in place, if not a full AML program, would be a best course of action. And most law firms or even third-party providers are able to incorporate that as standard templated language into your LPA at this point in time.
Cool. Yeah, and I think we have one last question from the audience, and it's a pretty good one. So there are a lot of emerging managers moving to productize tech banking platforms like Mercury and Brex after the banking crash. Can you share how you are different and the value of working with someone in your team?
Sure. Well, I would say the first answer to that is we're a bank, right? Mercury and Brex are really not banks. They work with banks and they're powered by banks. And I've sat on the other side at a fintech negotiating, banking relationships to fulfill a lot of the banking functions that those products provide to folks. But I think first and foremost, it's making sure that you actually have a relationship with a banker rather than a relationship with a product. And so that would be kind of my first comment on that. I think those are great onboarding infrastructure, and candidly, I mentioned earlier in the call, making an investment in tech and digital is an important focus for us, and we do want it to be very easy to work with Citizens on a go-forward basis. And so I think when I think about like the onboarding or online functionality of a Mercury or a Brex, those are things that I hope that we can bring to the Citizens platform in the future. Again, not going to happen right away, but certainly in the future. But as I think about what we're different in, obviously one is the ability to lend to you. As you have those lending needs and product needs, we're able to do that both again for the firm, but also for you personally. And then more than anything, it would be those value-added services that we referenced earlier. So things like thought leadership, things like temp CFO or consultant CFO guidance, GP/LP networking events, being able to just get embedded into our ecosystem. I think sometimes as an emerging manager, it can be very daunting to think through how you're going to scale your firm, how you're going to raise that fund. And it feels like you're a little bit on an island. And so you're reaching out, trying to see who's going to help with that process. You're going to rely a lot on your service providers for that help and guidance. They've done it. They've been there. They've seen a lot of things. So certainly that includes your fund administrator. That includes your legal counsel, and it should include your bank as well. And so we've seen that over time. We understand, again, the importance of that relationship. That's to say it's not going to be the most important thing for everybody, and I understand that. But I think what I've seen over the course of my career is, it's one thing to have a slick product, and that makes a lot of sense in a lot of situations. How quickly you can open an account, for example. That's really helpful. But when push comes to shove, you want to make sure that there's a person you can call that actually understands you, understands what you're trying to get done and where you're headed. And at some point in the future, when you raise, whether it's Fund 2 or Fund 3, you're going to have an institutional LP that says, I want to talk to your bank and make sure that you have the right protocols in place and that you're doing this the right way. I get those calls all the time, and it's great to talk to LPs and make sure that they understand who we are, how we operate, what we're doing, whether that's for treasury management, whether that's for a line of credit. That doesn't necessarily happen with Fund 1, but you're going to want to build that relationship so that when you do get to that point in time that you've got, a due diligence manager from, a multinational making that call, that you have a trusted party that you can introduce them to rather than just some anonymous email address at Mercury.
Totally. Yeah. And we got one more question, and I think I know the answer to it, but I would love to hear you say it out loud. What treasury products do you offer to VC funds, and how are they different from similar products offered by other banks, for example, SVB, JP Morgan, First Republic, et cetera?
Yeah, again, I think first and foremost, it's making sure we can offer them across the board. But I think for most, funds and firms, you're going to want a couple different things from a treasury management perspective. You're going to want an operational account. And that's just an on-balance, DDA. You're also likely going to want a sweep account, and that sweep account is going to have probably two different flavors. For those LPs that are UBTI sensitive, you're going to want to make sure that that's not going to trigger any of the UBTI language that's typically within your LPA. That can be handled a couple different ways, but most often we see clients that either want a zero return sweep product where it's just sweeping funds off sheet, not really there to generate significant yield, but just more of a safety precaution in terms of sweeping it off the balance sheet. The other sweep product, though, is more of a yield product, and so that's typically where we're sweeping into some type of money market mutual fund account. We offer a wide variety of money market mutual funds account here at Citizens Private Bank. I think the top returning rates on those right now are around a little over 5%, 5.15, something like that. Most banks should have that. They might differentiate on the rates based on sort of what access they have to different money market mutual fund sweeps. They'll all have different types of ICS. We have that, of course, as well. So it really is kind of depending on what you're trying to accomplish. Is it safety? Is it avoiding UBTI? Is it chasing yield in terms of the off-balance sheet products? But certainly we offer those here to, again, all clients across the spectrum, regardless of size.
Awesome. I think that is it for today. I don't see any more questions coming through. So just want to say thank you, Vince, for your amazing insight.
Yeah, thank you so much for having us.
Of course, it was great catching up over banking. Nothing more interesting the topic.
What isn't a more sexy topic than
us at Vector, we're super excited to be working with the Citizens team. And as a reminder to everybody, we're going to be sending out a follow-up with the recording of this webinar, along with a way to contact Vince and myself in case you have any more questions. But with that being said, thank you, Vince, for joining, and I'll talk to you soon.
Yeah, thanks very much, Kristina, and thanks to the Vector team.
Bye, everyone.